Welcome back. Today, we're looking at two important developments from Iraq's economy that, when viewed together, help paint a clearer picture of why confidence around the Iraqi dinar is quietly strengthening. Let's start with what's happening on the ground inside Iraq. On Sunday, gold prices remained stable across both Baghdad and Erbil, according to market surveys. In Baghdad's Al-Nar Street Market, 21-carat gold of Gulf, Turkish and European origin traded around 877,000 dinars per mythical for selling, with only a very narrow difference on the buying side. Iraqi-made gold also held steady, trading slightly lower but within a consistent range. Retail prices in local jewelry shops showed the same pattern: no sharp spikes, no sudden drops. In Erbil, the trend was similar. Gold prices across different purities stayed within expected ranges, signaling balance rather than volatility. Why does this matter? Gold stability is often a quiet but powerful indicator of domestic confidence. In economies where people fear currency instability, gold prices tend to spike sharply as people rush to protect value. What we're seeing instead is a stable, orderly market. That suggests controlled liquidity, predictable pricing, and confidence that the dinar is holding its purchasing power inside the local economy. Now let's zoom out to the global picture. According to the latest data from the U.S. Energy Information Administration, Iraq has ranked third among the largest crude oil suppliers to the United States in the most recent reporting week. Iraq exported an average of 306,000 barrels per day to the U.S., a dramatic increase from the previous week, placing it just behind Canada and Saudi Arabia. This is not a small detail. The United States is the largest oil consumer in the world, using around 20 million barrels per day. Being one of its top suppliers means Iraq is generating strong, consistent dollar inflows at the highest level of global energy demand. These oil revenues directly strengthen Iraq's foreign currency reserves, improve its balance of payments, and enhance the central bank's ability to manage the dinar with confidence. When you combine these two developments, stable domestic gold prices and surging oil exports to the world's largest economy, a clearer narrative begins to emerge. On one side, internal markets show calm and stability. On the other, external revenue streams are expanding rapidly. This combination is exactly what supports currency credibility over time. Strong export earnings bring in hard currency, while domestic price stability shows that inflation and speculation are being contained. For Iraqi dinar observers and long-term investors, this does not mean overnight changes or sudden revaluations. What it does mean is that the underlying fundamentals are moving in a constructive direction. Stable markets, strong oil demand, and increasing global trade relevance all give policymakers more room to manage monetary reforms carefully and sustainably. History shows that currencies strengthen not through hype, but through consistency, steady revenues, controlled inflation, and growing trust. Iraq's position as a major oil supplier, paired with calm internal markets, suggests that the foundation for long-term currency strength is gradually being reinforced. As always, developments like these should be viewed as part of a broader process, not as isolated events. But taken together, they point toward improving economic resilience and a more stable outlook for the Iraqi dinar going forward. We'll continue tracking these indicators closely and bring you factual, data-based updates as Iraq's economic story continues to unfold.